Hey guys, it's Carter. Welcome back to the channel. Hope you guys are all having a fantastic day today. Now in today's video, we are going to be talking about how to grow a small account. We're going to be talking about tips and tricks, and at the end of this video, we're going to be showing you guys a stock with opportunity and what I look for my entry points and my full strategy. So I hope you guys all enjoy it. If you guys do, hit that like button, subscribe. If you guys want to learn more about swing trading and how to find these stocks and opportunities that we're going to be talking about today, check out our school. It's awesome. We have private live streams, quizzes, lectures, a group chat, but more importantly, we actually teach you to trade. It's not a get rich quick scheme. It's not alerts or anything like that. It's honest strategies that I've learned over the past 7 years of full-time swing trading. So check it out down below. You won't regret it. And you guys can get 51% off by using code TRADER. Code TRADER to get 51% off. Only 5 spots left for that code. So if you want to elevate your trading game, check it out. You won't regret it. And guys, let's jump into this. So people all the time comment on my YouTube videos or my TikToks or Instagram, and they say, Carter, you can't grow a small account. And that is 100% false. That is one of the worst things and worst mentalities you could have as a trader or investor. Here's some things that you guys need to do in order to be successful. The first thing is to have good tools and a good broker. The broker I use is a broker called Moomoo. They're going to be the broker that we're going to be showing you guys at the end of this video, but why I love it is because they offer AI tools, they offer indicators, they offer scanning. So if you're trying to look for opportunity, you guys can just keep all of your broker, your buying and selling all in one place. But more importantly, why I would recommend them for beginners, because of 2 things. The first thing being paper trading. Paper trading is using simulated money to practice your entries, your exits, your risk management skills, because it's all simulated money. So it's fake. It's not real. So you can build up a strategy without risking real capital. Now, after you guys paper trade, guess what? They offer fraction shares. So you guys could fund an account with $100, continue to work on your strategy, but get the idea and get the mentality of using real money. It's a little thing that I would highly recommend doing, is to have a combination of both paper trading and fraction shares, because it will save you money, and more importantly, it'll make you money and build up a good strategy. Now, Moomoo is absolutely fantastic, but you do also want another scanner in your back pocket. The other scanner I use is a company called Finvest, and the reason why is because they are completely free. You're not gonna pay monthly for them and have an overhead already. It's all free stuff. And so I would highly recommend Moomoo. I'll put a link to them down below. You guys can get up to 20 free stock, and I'll put a link to Finvest. So if you guys want to sign up, you guys can do it there. Now, Finvest does offer a premium version, but honestly, it's up to you if you guys want to do it. All it offers is real-time information, which, as a swing trader where you're holding positions for several days and you're not day trading, I don't even pay for it, because I don't even think it's worth the $30 a month. Speaking of choosing stocks is one of the most important things you guys can do, because you can have the best strategy, the best broker, the best office, the best trading computer, but if you're not choosing the right stocks, you're going to lose money. So let's actually look at a stock here that I think has some potential and what I look for. All right, so this is a stock, ticker symbol GS, also known as Goldman Sachs. Now, looking at this stock here, you guys will notice the trend. So before I ever buy a stock, I want a list of criteria. I want a checklist. The first thing on my personal checklist is going to be trends. Trends, in my opinion, are probably one of the most underutilized things traders don't pay attention to. The reason why I say that is a lot of traders understand you want to buy a stock at a low price. So what they will do often is see a stock on a downward trend and buy that dip. Now, they think the stock will magically recover and they'll make all this money, when in reality, it's just better to find a stock on an upward trend that has sold off to some level of support. So So with this stock here, Goldman Sachs, you guys will see this yellow line here. This yellow line is what we call the 50-day EMA line. This line acts as support. It also will act as resistance. Looking at this stock here, we can see in the past where it's hit it several times, right? Once, twice, three times, four times, and it's gotten good buying pressure each and every time it hit that line. So now here we're looking at this and we go, okay, we could enter on that 50-day moving average line, keep our stop loss just below it for a push up to 60, the $672. Now, another indicator you guys need to look at is an indicator called the RSI. At the time, the RSI is trading for about a 41, which let's look back at previous history because the last time it was trading for a 41 was back in this range. And what happened? The stock went from 550 all the way up to over $640. So it had a really nice move. So now let's go through this again. We have a stock on an upward trend. It's sold off down to a moving average line, which is a recent support for the stock, and it's undervalued on the RSI. Another thing you want to look out for is going to be an earnings report. You can go ahead and go on Google and look up Goldman Sachs earnings date, and they'll give you a date. The reason why I don't hold a stock through an earnings is it's a 50-50 chance of making money. Ideally, you don't want to hold it through those chances because it's going to increase that risk, which we don't want. So the next thing that I do here is I go to a lower time frame. I want to go to like the hourly, 30 minutes, or some sort of time frame where I can draw out some sort of trend. You guys will notice here, if we look at like the 30 minutes or even the hourly, we have this. We have this general downward trend here where the stock is just kind of starting to sell off. So the biggest thing about becoming a trader and being a trader is being prepared. So yes, the trend has formed, but we don't want to get in on this position right now and have it continue to sell off. We want to get in on some sort of breakout. So the breakout here would be right near and above the 635 mark. So we're just going to set an alert and watch the stock. And then if it pops up, great, we'll be notified to get it in on this position. Now, this is a stock here that we recently traded, and let me show you guys kind of how this example works. Stock on an upward trend, a heavy support here on that 90-day moving average line. Now, this stock here, if we go to the hourly, let's remove these moving average lines. We can see this general downward trend. We got in on that breakout. The stock went from $23 up to about $24, and then it started breaking through support. So support is just where a stock has good tendencies of getting buying pressure. So you guys can see it popped up, started getting good support, and then the second it dipped down below it, we exited the trade. And you're probably saying, well, Carter, this move here was only like 3%. Well, yeah, if you guys can make 3% per month in the top 5% of all traders in the world, you're better than 95% of traders. So yeah, a stock like this where I make 3-4%, I will take that profit any day of the week, any hour, because that is a good return. That is one of the huge and big issues with people trying to grow small accounts is they go, okay, I only made 10% on $100. I only made $10. I can't live off that. Well, no, you're not trying to live off a $100 account. I hate to say it. You're trying to grow it and be consistent. And with trading, yes, we talked about that good strategy, the entry points, being prepared. But one of the most important things is having good risk and reward. Now, let's talk about how to implement this for your trading. So looking at this here, this is a trade return calculator. So with a stock like this here, one of the things that I always do is I plan out these trades. So if I enter here, keep my stop loss just below it. And ideally, you want to set your target at nearby resistance. So this gives a 4.6 risk and reward. So risking $1 to make $4 off $1. So if you guys were starting out with $100 and you found a stock like this, let's just say, 40 times over the course of a year, you're risking that 2% for a 4-to-1 risk and reward. Now, if you guys are profitable on 40% of your trades, so 60% you're losers on, at the end of the year, guys, you've doubled your account. It's sitting near and around $211. This is why good risk management is so incredibly important, is because this is with 40%. Imagine you're 50%, 60%. This account will compound very, very, very fast. So don't focus on these crazy returns. Just focus on consistency, good risk management, and just scaling up. Using and leveraging your account. What I mean by that is the profits you make today. So maybe you only make $5 in the next week, you can use that $5 and buy more stocks, and it will compound your account very, very, very quick. Now, with trading, there is some things that I've done in the past, and some things that I would just recommend trying to avoid. One of them being is thinking you need to be in a trade every single day, when in reality, you should always choose quality over quantity and really try not to overtrade. The second thing you guys need to do is don't worry about FOMO. Your friends, your family, your community, if you're in a stock community, they're going to be buying stock. They're going to be telling you stocks to buy. Don't worry about them. Don't have that fear of missing out. There's always going to be opportunity. Don't chase the market. The market will come to you. You just got to continue to invest in yourself and scan for those plays. But growing a small account is definitely doable. You just need to put in the time, journal your trades, figuring out what works and what doesn't, and just honestly just understand the long game of it. Trading is not an easy way to get rich quick. It requires discipline, hard work, practice. You just have to have that mentality in order to become a trader in the market. So I hope you guys all enjoyed it. If you guys did, hit that like button and subscribe. Check out our school, Code Trader, for 51% off. I'll see you guys in there. And don't forget to sign up with Moomoo. You guys can get up to 20 free stock just by signing up. So I'll see you guys in there. Hope you guys enjoyed it, but take care.